New Residential Investment Corp is a real estate investment trust. It focuses on investing in and actively managing investments related to residential real estate. The company primarily targets investments in excess mortgage servicing rights, residential mortgage backed securities, residential mortgage loans, and other related investments. Because of the business model, it's called an M-REIT. New Residential Investment Corp has a dividend of about 13.22%. But is it right for you? Let's take a look. Caveat. Since M-REITs are volatile and can be easily impacted by the mortgage market, the real estate market, and the federal government bond market, they can be risky. However, their high yields and direct payment of profits to investors make them a great source of cash in the short term. Further, they offer a liquid form of real estate investing and access to professional management. By purchasing shares in an M-REIT, individual investors can indirectly lend money to people on the mortgage market. If you think there will be a recovery in the real estate and mortgage markets, M-REITs are one way to make that bet. Younger, more aggressive investors who do not own any real estate themselves, but who are bullish on real estate might want to consider M-REITs. However, M-REITs can also have a place in more mature portfolios as long as the percentage they make up is no more than the investor can afford to take a loss on. Shares of New Residential Investment Corp. With the stock symbol of NRZ have lost about 6% in the past month as of my research. In that same time, the financial sector lost 5.8%, while the S&P 500 lost 6.3%. Investors will be hoping for strength from NRZ as it approaches its next earnings release. The company is expected to report earnings of about 54 cents per share, which is down 6.9% from the prior year quarter. Meanwhile, the consensus estimates for revenue is projected net sales of about $240 million, down about 11% from the year ago period. Looking at its valuation, NRZ sports a forward PE ratio of about 6.97. For comparison, its industry has an average forward PE of about 9.5, which means NRZ is trading at a discount to the group. Recently, tumbling rates at the long end of the curve have put a big hurt on the M-REIT industry. As of my research date, the 10-year Treasury yield is down to 2.17% versus 2.52% at the start of May. The current Fed funds rate is 2.39%, and with the exception of the 30-year long bond, the entire Treasury curve is trading below that level. An inverted curve not only puts pressure on the profits of levered carry players, but the plunge in mortgage rates portends a possible refinance wave, causing another potential hit to profits. Other risks include whether the M-REIT buys mortgages that are backed by the federal agencies like Fannie Mae, Freddie Mac, or Ginnie Mae, or not. Further, because of the amount that M-REITs must pay out, which is at least 90% of their income, this leaves little room if there are operating losses for an extended period of time. So let's now take a look at our charts. This is the annual chart on New Residential Investment Corp going back to 2013, and as stated before, the symbol is NRZ. For disclosure purposes, I do not hold any shares of NRZ at this time. And also another caveat, do your fundamental analysis on this stock. Looking at the chart, bottom in 2016, top in mid 2018, we have a downtrend here. Interestingly, we have an uptrend in those higher lows like that. Is it a pennant? Not necessarily, but it is moving toward a pinch point. Not sure if that's all that important. Looking here at the MAC, it looks like the fast line did move through the slow line, and it's moving on its way down here to that zero level with the slow line heading on down as well. But back here is that's your bottom, and then here's your topping process in 2017 through 2018. Looking simply at this chart, and how fast or slow it's moving, I would imagine this is going to take several months before there's a bottom in. But right now, it looks like it's heading down. Same thing through the histogram as well. Price rate of change. That is going to be an important oscillator for you to watch. Looks like it's heading down to that -2, and it got to that level back here in, say, 2016. So is it going to repeat itself? I don't know. Pay close attention to the price rate of change. Moving down, relative strength is in the midline. Can't really say too much. Doesn't look like it's very weak, but it certainly isn't strong either. Stochastics heading on down to that midline. Looks like that might be something else to watch for a turnaround in the price. Volume looks fine, and moving there into the Williams. The Williams looks okay with that big long downtrend both on the upper side and the bottom side here. Maybe we're going to be bottoming out later in 2019. Going back up to the price chart. Again, I don't think that this pinch point is really going to make much difference. I think the other oscillators are telling us that you have several months to watch, but pay attention to this chart, the price chart, because the technicians pay attention to this chart. They shouldn't, but they do. So you have to pay attention as well. Watch the other oscillators, particularly that MACD, and as well the price rate of change. That's going to give you a big clue if you're considering investing in NRZ. For today, that's ChewDog Charts. Thank you.